This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia is leading efforts to close divisions between Saudi Arabia and the United Arab Emirates to help strike a deal to raise oil output in coming months, 3 OPEC Plus sources said, with OPEC and its allies yet to set a date for their next oil policy meeting. Disagreement between the two Gulf OPEC allies was publicly exposed last week, with Riyadh and Abu Dhabi at odds over a proposed deal that would have brought more oil to the market, potentially cooling a rally that has seen prices hit 2-1/2-year highs. The rare spat forced the OPEC, Russia and other producers, a group known as OPEC Plus, to abandon talks on boosting production after days of negotiations.
OPEC's sudden disarray would seem to be an opportunity for U.S. shale producers to lock in profits, with oil prices near multi-year highs, but sources at those companies say they are not taking chances with the market's volatility. Shale producers are famous for boosting output whenever oil prices surge. However, the shale industry has been notably restrained so far this year even as oil surged past $70 a barrel. They have maintained a lower level of production after vowing to investors that they would hold the line on spending to boost returns. Oil prices are above $73 a barrel, near 3-year highs. On Monday, OPEC Plus were unable to reach an agreement on returning supply to the market.
Moving on to the top news in the energy sector.
OPEC Plus brinkmanship has taken oil prices towards $80 a barrel, the highest since 2018, threatening to upend central banks' transitory inflation narrative as well as the post-pandemic economic recovery. Last year's Saudi-Russian oil war showed that disputes between OPEC Plus members do not always result in higher prices, but this week's standoff within the group sent prices higher, building on year-to-date gains of around 50%. Many traders do not discount a return to $100 a barrel, levels last seen in 2014.
The U.S. Energy Information Administration on Wednesday cut its 2021 world oil demand growth forecast by 80,000 barrels per day to 5.33 million barrels of oil per day. In its monthly forecast, the agency raised its oil demand growth estimate for 2022 by 80,000 barrels of oil per day to 3.72 million barrels of oil per day. Next, we have the top news in metal markets. China plans to increase its use of steel scrap by 23% to 320 million tons by 2025 and to increase production of recycled non-ferrous metals, in an effort to ensure supplies and to meet the country's climate commitments. The world's top metals consumer will boost its recycled non-ferrous output to 20 million tons in the next 5 years from 14.5 million tons in 2020, the National Development and Reform Commission, NDRC, said on Wednesday. That includes targets of 4 million tons of recycled copper, 11.5 million tons of recycled aluminium and 2.9 million tons of recycled lead, the state planner said in a statement.
Copper prices rose on Wednesday, recouping losses from the previous session, as investors waited for the release of minutes from the latest Federal Reserve meeting. The minutes will likely show how serious the Fed is about tapering its asset buying and how soon it could begin to hike rates, with a hawkish turn potentially knocking riskier assets. Benchmark copper on the London Metal Exchange was up 1.6% at $9,465 a ton at 1600 GMT. Copper fell 2.1% on Tuesday as oil prices, stock markets and U.S. bond yields fell and the dollar rallied, making metals costlier for buyers outside the United States.
We will now look at the top news in the agricultural sector.
Chinese farmers have sharply increased corn planting this year to cash in on demand-fueled record prices, a trend that is likely to cool the country's recent rampant appetite for imports heading into 2022. The expansion, which comes mainly at the expense of soybeans and other crops including sorghum and edible beans, would boost China's maize output in 2021-22 by at least 6%, according to market participants. That will likely ease a repeat of last year when strong feed demand from the hog sector propelled China's corn use beyond local production and sparked a 26 million ton import spree that turned the world's largest grain producer into the top corn buyer. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.